We begin in the UK, where the Bank of England is set to raise its key interest rate for the 14th time in a row. This comes as inflation in the UK stays stubbornly high and millions suffer due to the cost of living crisis. Well, the BOE is seen hiking borrowing costs by at least 0.25% to 5.25%. Some experts believe there is still a chance the bank can opt for a 50 basis point move, and that would make it 5.5%. As its last meeting in June, the Bank of England lifted its rate by 0.5 point. And annual inflation figures in the UK dropped to 7.9%, down from 8.7%. Now, October 2022, UK inflation struck a 41-year peak at 11.1%. However, inflation in the UK is still among the highest in the G7 nations. Meanwhile, high interest rates in the UK have sparked mortgage turmoil. Commercial lenders are lifting their own borrowing costs on home loans, which boosted their profits. Well, for more on this, Klinsmann Moratti is joining us today, the founder of Pareto Economics, a global world affairs research consultancy, joining us live from the capital. So we pretty much know what we're expecting from the Bank of England. We are expecting that 25 basis point move, maybe 50 basis points, but it's looking at 0.25%. What impact will this have, particularly on those people who are struggling with these interest rates and their mortgage rates?
What we have to understand something, Katie, is that the first thing is the majority of mortgages that will end this year, 800,000 or so, will end, as I mentioned, at the end of this year. So for those people, the interest rates that they'll pay at the beginning of 2024 will change substantively. Also, another 1 million borrowers into 2024, at the end of 2024, will face again new rates because their fixed term rates for 5 years would have ended in 2024. What this will also do is for new borrowers, this will probably deter a lot of first-time buyers because interest rates have gone up so much that banks are obviously passing on those interest rate hikes to the customers because that's the way in which they make money, which is going to cause and which is already causing house prices to fall. So although house prices are becoming cheaper, the rate of borrowing is increasing, which is almost leveling out the playing field, making it harder for first-time buyers to get on the property ladder.
This is a very difficult one because simple economics proves that if you put up interest rates, you reduce inflation, although we're not necessarily seeing that because inflation is so very stubborn and there's many external factors as well playing their part. Russia's invasion of Ukraine, for example. We've also got a very tight labour market here in the UK, maybe because of COVID. Some people saying Brexit's involved with that situation too. What is the answer to this? Because actually Rishi Sunak has said that he's going to halve inflation by the end of the year, but it's actually nothing to do with the government. The Bank of England is separate and independent here.
Yeah, there's two different roles. The government and the Bank of England have two very separate roles. So the Bank of England's job is to make sure inflation stays within its 2% targets, and the government of the UK, its main priorities is public spending and the security, physical and otherwise security of the United Kingdom. So I'm not too sure as to why Rishi Sunak is causing this fight to be put onto his shoulders. Obviously, there's election coming up next year, and he wants to be seen as doing the best he can to make sure that the people of the UK are not facing this crisis all the way through towards the election and beyond. But for sure, inflation has actually come down from last month and also from year to date from last year, which are good signs. I think what the Bank of England want to do is to make sure that this trend continues into the future, so we do see a gradual decline of inflation, so that interest rates do not need to be hiked up any further. So this is, I think, going in the right direction, although we are going to face short-term pain. For anyone who is looking to renew their mortgages, they are obviously going to be doing what is necessary within their own households to make sure that they can afford the interest rate hikes that they will inevitably face at the end of this year and also at the end of next year too.
Well, we await that decision coming up at lunchtime today. Thank you so very much. That's Klinsmann Moratti there, founder of Pareto Economics, a global world affairs research consultancy, joining us live from London.